Okay, having done MCQ 11, now moving towards to MCQ number 12. This is again on salary chapter. Mr. Karan completed his MBA in April 2022 and joined XYZ Limited from 1st May 2022. Please underline 1st May 2022. That means he must have worked only for 11 months. Write down there 11 months, not for total 12 months in the current year. His basic salary is 2,25,000 per month. That's his basic, and he is being paid 12% of basic salary as dearness allowance. And the entire dearness allowance is forming part of retirement benefits. Please underline this. He contributed 11% of his pay and DA. Pay means basic salary, basic pay. Okay, and DA towards the recognized provident fund, and the company, that is employer, contributes the same amount. Underline this also, employer contributes the same amount. Accumulated interest on provident fund as on 31st March 2023 is 49,325. Okay, if both of them are contributing the same amount, company also contributes same amount. That means this interest, half of this interest would be on employee's own contribution and half of it will be on employer's contribution. That goes without saying. What would be the amount of income chargeable to tax under the salary of Mr. Karan for the AY 23-24 if he does not opt for section 115 BAC? If he does not opt for 115 BSc, then only difference that will make here in this question is that a standard deduction will not be allowed under 115 BSc. But if he is not opting for 115 BSc, then standard deduction will be allowed. How many details are given to us? We are being provided with basic salary, dearness allowance, employer's contribution to RPF and interest on RPF. 4 details are given based on which we have to calculate. But then don't forget that he has worked for only 11 months. Quickly, let's calculate it out. So his basic salary is 2,25,000 per month. 2,25,000 per month into 11 months. 2,25,000 into 11 months would mean 24,75,000. 24,75,000. Dearness allowance is 12% of basic salary. That means it will be 12% of 24,75,000. 24,75,000 into 12%. Let's work it out. Into 0.12, that will be 2,97,000. 2,97,000. Keep on adding it. Okay, now apart from this, employee himself is also contributing something. We don't have to compute the net income. We have to compute only salary. That means employee's own contribution is to RPF account is not an income, but it is eligible for deduction under section 80C. But that has not been asked to us. We don't have to compute net income. Therefore, employee's own contribution will not be added in the income, nor will it be subtracted right now. Next is employer's contribution. Employer's contribution, that is company's contribution to RPF account. Now, how much is exempt out of here? Employer's contribution, if you recollect our theory notes, employer's contribution to RPF account is exempt up to 12% of employee salary. 12% of employee salary subject to maximum of 1,50,000. Okay, 12% of employee salary. So how much employer has actually contributed? Employer, employee, both of them are contributing 11% of basic and dearness allowance. Basic, that is pay and dearness allowance. So how much employer is actually contributing? It will be 11% of what? 11% of basic plus dearness allowance. Basic is 24,75,000 and dearness allowance is 2,97,000. Total is 27,72,000. So they are contributing 27,72,000 ka 11% is equal to into 0.11, 3,04,920. 3,04,920. This much employer has contributed. And how much is exempt? It is exempt up to 12%. 12% of employer's employee salary. 12% of again same thing, 27,72,000. It should be 12% of basic plus dearness allowance forming part of retirement benefits and commission based on turnover. Basic plus DAR, that is dearness allowance forming part of retirement benefits and commission based on turnover. Okay, which will again be more than 3,04,920. 27,72,000 into 0.12. 3,32,640. It is exempt up to 3,32,640. Therefore, taxable amount will be nil. Taxable will be nil. However, our institute has ignored one point, that this employer's contribution is exempt up to 12% of salary. However, it is also exempt subject to maximum of 1,50,000. However, this particular point, bracketed wordings, institute seems to have ignored, and they have taken the taxable amount from this to be nil. Actually, there should be taxable amount. Taxable amount should be, the exempt amount should be 332,640 or rupees 1,50,000, whichever is lower. Accordingly, exempt amount should be only 1,50,000 and balance should be taxable. Balance should be 1,54,920. This much of employer's contribution to RPF account should be taxable. But this particular point institute has ignored, otherwise our answer will not match. That's why I am considering this to be nil. Okay. And there is one more extra point which institute has taken into account, that if you recollect while discussing this interest on RPF account. Interest on RPF account is exempt up to 9.5% of balance in RPF account. Agreed. However, it is also subject to one more proviso. Proviso is given later. Proviso was introduced last year only, AY 22-23. First proviso to section 10.11 and 10.12, that if employee has contributed more than 2,50,000 in a year in RPF or SPF account, then interest on such excess contribution, interest on that much contribution made by account holder, that is made by employee himself, exceeding 2,50,000 in a year, in that year, on or after 1st April 21, will now be taxable, will not be exempt anymore. Meaning thereby, interest on RPF SPF account is exempt up to 9.5% of the balance in the account. However, restricted to this particular thing. This much interest on excess contribution of employee, only on employee's contribution exceeding 2,50,000 will be taxable. So let's first find out how much employee has actually contributed. So employer-employee, both of them have contributed 3,04,920. How much is the interest on employer's contribution? How much is the interest on RPF account? Interest on RPF account is 49,325. Out of 49,325, this 49,325 is on employer's contribution as well as employee's contribution. 49,325 is on a total balance lying in RPF account, which comprises of two factors. So first of all, total interest 49,325 will have to be divided into two parts. How much is the interest? How much out of 49,325 is on employer's contribution and how much is on employee's own contribution? Obviously, it will be equal. So 49,325 divided by 2, 24,662.5 is on employer's contribution and 24,662.5. Let's round it off to 24,663. This much is the interest, total interest on employee's contribution. How much employee has contributed? Employee has contributed 11% of his 27,72,000. That means employee has contributed 3,04,920, which we just calculated. Employer-employee, both of them have contributed same amount. 11% of 27,72, 304,920. Now employee contributed more than 2,50,000. Answer yes. So out of this, first 2,50,000 and balance, or I would say excess contribution by employee. Excess contribution to RPF account exceeding first 2,50,000 is 54,920. So what we do now is that out of this interest on employee's contribution, interest on employee's own contribution, which is half of 49,325, which is 24,663. Out of 24,663, how much is the interest on this excess contribution proportionately? How much would it be? It will be 24,663 into 54,920 divided by total contribution 304,920. I hope you people are understanding this. This is a cross multiplication. 24,663, simple language, 24,663 is on the entire contribution of 304,920. Then out of 304,920, how much will be the interest out of 24,663 on 54,920? So we are just cross multiplying it. 54,920 multiplied by 24,663 divided by 304,920. How much would that be? Let's calculate it out. 24,663 divided by 304,920 multiplied by 54,920. 4442. 4442, you can calculate it. This is the interest on excess contribution. Out of total interest on employees contribution, so what did we do? Out of 49,325 ka total interest, we found out how much is the interest on employees contribution and how much is the interest on employers contribution. Employers contribution will be exempt up to 9%, 9.5% of balance. Definitely it seems to be much lower than 9.5%, definitely. So that I'm ignoring. So 4442 is the interest on excess contribution of employee as per first proviso to section 1011 and 1012. So interest on employees contribution, employees excess contribution to RPF account. This is 4442. 4,442. Let's take the total salary. Now institute's answer is wrong, but then because institute has ignored this particular point, institute has ignored this 150 for 920. A contribution of employer exceeding 1,50,000, that means totally ignored by institute. Doesn't matter, we will just follow this way. Institute people also comprised of human beings, they also make mistake. 24,75,000 basic salary, 2,97,000 dearness allowance, and 4442 2776,642. Sorry, 2776,442. 2776,442 and minus standard deduction. Standard deduction is flat 50,000, which is available only if not opting for 115 BSc. 2726,442. 2726, this is the net salary, net income taxable under the salary. This is the institute's answer, 2726,442. First one, 2726,442. Let's check what's institute's answer. Our answer is A, 2726,442. Institute's answer is also A, which is technically a wrong answer. What should be the correct answer? The correct answer in my opinion should be 26,442 plus this 154,920. Correct answer should have been 28,81,362, but institute has not given that as one of the option. So I tried working it out and just to match up with institute's answer. But any which ways, with that, this question comes to an end.